Good afternoon. It is Thursday, October 19th, 4:45 p.m. 30th anniversary of Black Monday. Wow, how things are different in some ways, and in some ways so similar. The Dow Jones Industrial Average, the futures were down 150 points. And everybody got themselves all worked up into a lather, like, oh, this is it. This is the correction. This is it. This is the start. No, it's not. What did I say? This time it's different. This time it's different. Dow actually managed to end in the positive today, which was pretty much an in-your-face type of thing. Okay? Doesn't matter. I've said it. No news is good news. Bad news is good news. Good news is good news. It doesn't matter. Stocks march higher. Okay? I was thinking a lot about that day. Black Monday. A lot of people lost everything. There were a lot of tears on Wall Street that day. Literally. If you look at the parallels from then to now, there's some things that are strikingly obvious. I think the most important is program trading, computers. Back then, they started with computer trading, okay? And look at where we're at now, okay? And financial products that they really didn't know, like portfolio insurance. And look at where we are now. You got the average retail investor just running into ETFs, and you got all these products, right? These credit default swaps and CDOs, and it's so, but this marches on, this market. Gold had a nice day today, up about $8 as I do this video. I'm watching gold, and I really believe this range seems to be getting tighter and tighter right now. The last takedown, they brought it down to what, 1270? Here, they couldn't even take it down that low. So, it's looking okay. As this range, if this range gets tighter and tighter, there's going to be a breakout one way or the other. So, we have to pay close attention to that. Keep in mind, my price, $13.40. Until then, everything is noise. All right? We need to take out and hold $13.40 for 3 consecutive days. Okay, until that, we're in a range. We're in a range from 1200, let's say 1215, to where we are now, 1300, 1340. Okay, so that's what I'm looking for. Other than that, pretty quiet day. New claims hit haven't been this low since 1973. So everybody is working, huh? Looks like. I don't. Oh, that reminds me of another thing. Parallel between 1987 and today, 30 years later. There's this disconnect. Back then, as Wall Street was crashing, Main Street really wasn't affected. There was this complete disconnect. That was their own little world, okay? And now it's almost very similar, okay? This disconnect between stocks, Wall Street, and Main Street. So that's really about it. Just a quiet day. People who got their hopes up for this market crash today, I said no. All right, this time it's different. Look at the bond market. 10-year, 2.31. It's not really going anywhere, okay? There's no indication in the bond market that there's any trouble on the horizon. Okay. So, I mean, it's flat as a pancake, basically. I mean, again, it's been quiet. So that's pretty much it. More of the same. Just watch this gold. It's acting resilient. Okay. I think is a good word these last couple of days. Bouncing back nicely. Dollar was down. We're going to see now if this dollar has topped out. Okay, is this bounce over? I don't know. I don't know yet if this bounce is over. So we got to watch that. But that's it. Pretty much ho-hum day. Anyway, that's it for now. Ciao.